It starts with the sound of a card being declined at a transit kiosk while the smell of wet asphalt fills your lungs. You don't have a net worth yet. You have a countdown, a digital ticking clock that measures how many hours of life you have left before you are evicted from the grid. You are earning $15 an hour at a warehouse where the ceiling is so high you can't see the owners, but you can feel the weight of their expectations in every joint of your body. At this level, you aren't an investor or even a consumer. You are a unit of labor power being auctioned off in 60-minute increments to pay for a room that smells like someone else's old cooking. You realize the first brutal law of the basement. When you have nothing, the system charges you the highest possible price for everything, from the interest on your payday loan to the time you spend waiting for a bus that's always late. Your bank app is a horror movie you watch in slow motion, refreshing the screen at 3 a.m., hoping for a glitch that never comes. You've learned to perform the empty wallet calculus, deciding if the penalty for a late utility bill is cheaper than the cost of a generic prescription that keeps your lungs clear. The machine thrives on this level of desperation because a man who is suffocating doesn't have the lung capacity to scream for change. You spend your weekend sleeping 14 hours just to recover from the theft of your vitality, while the world tells you that you just need to hustle harder. You start a secret ledger in a stolen notebook, tracking every cent like it's a drop of blood because you've realized that the only way out is to become as cold and clinical as the system that's consuming you. You cross the $500 savings mark, and for the first time in your life, you don't spend it to feel human. You bury it in an account the world doesn't know about. This is stage 0, the moment you stop being the fuel and start realizing that the machine has a flaw, and that flaw is your sudden, unexplained silence. You are not starting your career. You are performing a prison break in slow motion, and the first bar you have to saw through is your own need for comfort. You cross the $5,000 threshold, and for the first time in your life, the predatory silence of your apartment is replaced by the soft, artificial purr of a climate-controlled office. The machine has upgraded your status from disposable labor to junior associate, which really just means you've been granted a slightly longer leash and a better grade of coffee. You get your first real monthly deposit, $4,000, before the state and the landlord take their mandated pound of flesh. For exactly 48 hours, you feel like you've won until you realize that your new environment has an entry fee you didn't see on the contract. The bank sends you a letter, thick, cream-colored paper, congratulating you on your financial maturity and offering you a credit card with a $10,000 limit. This is the credit lure, the system's attempt to trade your future decades for a leather interior and a sense of belonging in a zip code that doesn't know your name. You learn the second law of the hierarchy. The machine doesn't want you to fail. It wants you to be successful enough to service a debt you can never fully extinguish. Your net worth hits $15,000 and you perform the middle-class pivot, buying the watch and the shoes that signal you've arrived while your actual freedom is still a decade away. You sit in meetings where people use words like synergy and optimization, and you realize these are just high-end synonyms for the same grinding gears you felt in the warehouse. You start measuring your life in weekends, 48 hours of frantic consumption used to numb the memory of the previous 120 hours of obedience. You check your secret ledger at 2 a.m. and you see that your savings rate has stalled because you're now paying for the privilege of being professional. The machine is trying to turn you into a high-value consumer, a person who earns a lot but owns nothing, a battery that is recharged just enough to stay in the circuit. You realize that the $25,000 in your account is not a fortune. It is a bribe to keep you from noticing that the ceiling is still there. It's just made of better glass. You decide to stop playing the status game, and you start looking for the exit button buried in the fine print of the tax code and the compound interest tables. You are 26 years old, you have $20,000 in a brokerage account, and you are officially the most dangerous person in the office. The one who doesn't need the next paycheck to survive. You cross the $50,000 mark on a quiet Wednesday afternoon, and for the first time, you possess enough capital to buy a year of your own time. You don't feel like a victim of the economy anymore. You feel like an observer of it, watching the gears turn with a cold, analytical eye. You realize that your peers are still arguing about the cost of living, while you have quietly shifted your focus to the cost of extraction. You take your first major risk. You don't buy a home to live in, you buy a small realistic duplex to rent out. You are using the bank's own leverage to acquire a piece of reality that pays you for existing. When the first rent check for $1,900 clears while you are sitting in a meaningless corporate meeting, everything changes. It is the first money you have ever earned that didn't require your physical body to be present or your sweat to be spilled. You cross the $100,000 threshold, and the number on the screen begins to have a personality. It has preferences, it wants to grow, and it resists being wasted. You stop thinking about money as a way to buy things and start thinking about it as a source of information. The social isolation begins to set in, but it doesn't feel like loneliness. It feels like desynchronization from a frequency that no longer serves you. You realize that your context has become untranslatable to the people you used to know, so you stop explaining and start observing. You are no longer talking about the weather or the news. You are talking about the velocity of capital and the durability of assets. You receive a job offer with a $30,000 raise, and for the first time in your life, you turn it down without flinching. You choose to keep your free time to build your own engine rather than selling it to upgrade someone else's empire. Your net worth hits $150,000, and you realize that you are no longer a high earner. You are an owner in training. You understand now that the race doesn't end when you have enough. It ends when you own enough of the board that the race becomes optional. You cross the $150,000 mark, and for the first time, the numbers on your screen feel heavy. You realize that while your income is high, your velocity is stalling because the machine is still taxing your time at 100%. You sit down at midnight to run the numbers on your own existence, accounting for the brutal mathematics of the middle-class desert. You type the projections into the cells, factoring in a 32% tax bracket and the corrosive effect of 6% inflation. The result hits you with clinical force. Under the current script, you are still 30 years away from actual autonomy. This is the third law of the hierarchy. A high salary is a ceiling dressed up as a floor, designed to keep you looking down so you never notice how much of the building is above you. You realize that the firm doesn't pay you for your results. They pay you to stay in your seat so you don't build your own board. So you double down on the assets you've already started, shifting your focus from earning to accumulating. Your rental property business scales to 3 units and the monthly cash flow hits $4,000. Your brokerage account crosses $200,000, and for the first time, you see your investments buy their own shares without you touching a cent. The fourth rule begins to hum in the background. Below $500,000, you are still moving the money, but above it, the money starts moving itself. You stop talking about your job and you start talking about your positions. The isolation at $300,000 is absolute because you can no longer participate in the grievances of the broke. You realize that your old social circle is a bucket of crabs, and every time you reach for the rim, someone tries to pull you back into the safety of the bottom. You reach $400,000 in net worth at the age of 35, and your relationship with risk has been completely rewired. You've had a month where the market wiped out $20,000 of your value, and you didn't even blink. You understand now that volatility is not a danger, it is a price of admission for the only game that actually matters. You cross the $450,000 threshold, and you start looking at the 1% not as celebrities but as competitors. This is the end of the plateau. You have enough fuel to survive the winter, and now you're preparing for the summer of your own sovereignty. You cross the $500,000 mark, and the world begins to feel quiet. The fourth rule of the machine is now your daily reality. Below $500,000, you are the one moving the money. But above it, the money starts moving itself. You stop sleeping as well as you used to. It's not from the frantic stress of survival. It is from the sheer intensity of the scenarios that now haunt your mind. You find yourself sending emails at 5:30 a.m. to people in time zones you used to only see on maps. You realize that your reach is no longer limited by your physical location. You receive a job offer for $250,000 a year. It comes with a corner office and a title that sounds like a crown. You turn it down without a second thought. You've run the numbers and you realize that a $250K salary is just a faster treadmill, and you're already building a vehicle. Then it happens. A random Tuesday with nothing ceremonial about it. The notification on your screen finally shows 7 digits. You sit with the number for a moment, waiting for the feeling of arrival to wash over you, but all you feel is a quiet satisfaction that the math worked. The realization hits you immediately. $1 million is not wealth. It is simply the minimum viable capital required to stop being a servant. You run the math again. $1 million at a 4% return is $40,000 a year. It is enough to survive, but it is not enough to own the board. The identity crisis begins. You realize that happiness was never the point of the climb. You were only using it as a placeholder for autonomy. You stop going to the networking events and the startup meetups. Everyone there talks about what they're building while drinking cocktails they can't afford. You don't have contempt for them. You just no longer speak the same language. You are 38 years old. You are a millionaire on paper, and you've just realized that the real game hasn't even started yet. At $1 million, you think you are a god of capital, but the machine is simply letting you sit at the adult's table to see if you'll choke on the steak. You start angel investing in startups that your new friends pitch to you over $300 lunches, believing that your success in one field makes you an expert in all of them. You commit $500,000 to a private equity fund you don't fully understand because you want to be the person who can say he's in the deal at cocktail parties. This is the fifth rule of the hierarchy. The first million makes you dangerous to your own survival because you have enough money to make mistakes that you can't work your way out of. Then the first crash hits, a market correction or a failed venture that liquidates 40% of your paper wealth in less than a month. You watch the digits vanish and you realize that while you were playing the part of the elite, you hadn't yet built the fortress to defend your position. You performed the millionaire's retreat, selling the second home and the car you didn't need, finally understanding that $1 million can be deleted faster than it was earned. You spend 2 years in a state of clinical discipline, moving your focus from growth at any cost to capital preservation and risk management. You stop chasing the 10-bagger and start obsessing over the asymmetric trade, the moves where your upside is infinite but your downside is mathematically capped. By the time you cross $3 million for the second time, you are a different species of investor. You realize that at $5 million, the game is no longer about winning every hand. It is about remaining solvent longer than the people you are betting against. Your reputation begins to act as a financial instrument, drawing in opportunities that never reach the public market because owners want to deal with someone who has survived the fire. You find that you have more access than a CEO with a $10 million salary because you own your time and your capital, while he is still a servant to a board of directors. You are 42 years old, your net worth is $5 million, and for the first time, you can feel the true weight of the machine, not as something crushing you, but as something you have finally begun to master. This is the end of the ego. You have lost enough to be humble and earned enough to be dangerous. At $5 million, the texture of the world changes, becoming smoother and more silent. You realize that your primary currency is no longer the dollar. It is the basis point, the microscopic unit of measurement that determines the success of your positioning. The seventh rule of the machine arrives with a cold clarity. At this level, your reputation is a financial instrument that earns returns independent of your physical presence. Opportunities no longer find you in the public market. They arrive in private dining rooms where the deal is written on a napkin before the lawyers ever see it. You enter a transaction that will return $800,000 in 18 months and you feel nothing but a mild curiosity about the closing date. You know that one deal might return millions while another might return zero, and you are in both because the correlation between them is the actual trade. You start meeting people who control 50 or 100 million, and you study the way their silence carries more weight than your words. You stop talking about money with your old friends, not out of arrogance, but because the conversation has become mathematically imprecise. When they project their fears onto numbers, you realize that you no longer possess the vocabulary to comfort them without lying. At this level, you make a decision that would have kept you awake for a month when you were 23. A company you are invested in restructures its workforce, terminating 140 people you will never meet. You review the cap table, you see the position value increase, and you hold your ground without a single tremor in your hand. You don't feel good about the profit, but you don't feel bad about the cost. You only feel the distance, the gap that grows as the zeros multiply. Your net worth crosses $10 million, and you realize that you have officially bought back the most expensive asset in existence, your right to ignore the passing of time. You find that you have more access than a cabinet minister because you do not lobby for outcomes. You advise on realities that you have already financed. You are 45 years old. You are a multi-millionaire on paper, and you've realized that the person you were at 0 is now just a ghost that haunts your older photos. The transition to the final stage, the sovereign level, is no longer a goal. It is a mathematical inevitability that you are now simply waiting for. At $20 million, the human being disappears and a sovereign institution is born in its place. Your primary currency is no longer the dollar. It is the framework, the invisible set of rules that you now help to write for the rest of the board. The eighth and final rule of the machine becomes your only truth. The climb was never about the money. It was about the measure of the distance between who you were and who you had to become. You no longer own stocks. You own the infrastructure of human survival, data centers, patents for longevity, and the private debt of mid-sized nations. Your peers are no longer CEOs. They are the technocrats who move interest rates and the governors of central banks who call you when they need to stabilize a currency block. You have effectively bought the only thing the 23-year-old version of you thought was impossible. You have bought the right to ignore the passing of time. The isolation is now total, but it doesn't feel like loneliness. It feels like the quiet of a laboratory where the experiment has finally reached its conclusion. You watch a new technological revolution begin from a room 50 floors above the street, and you decide whether it will be allowed to flourish or if it will be absorbed into your existing holdings. The moral architecture of your life has become entirely abstract. The lives of millions are now represented as basis points on a dashboard that updates every 6 seconds. You realize that infinite cash flow isn't a sum of money. It is a rhythmic, autonomous pulse that functions entirely independently of your heartbeat. You meet your son, who is 23 and vibrating with ambition about his first high-paying job, and you see the same fuel that once burned inside of you. You realize that you cannot tell him the truth because the machine requires his belief to function, and your empire requires 1 billion people like him to turn the wheels. You realize that you didn't just break the ceiling for yourself, you removed it entirely for everyone who comes after you, but in doing so, you've left them with no map to follow. You are too embedded to be removed, and the system would cost more to dismantle than to keep. This is not power, it is permanence. The race is over only when you realize you were the one holding the stopwatch the whole time, and you finally decide to let it drop.